Welcome. Today we will provide you with knowledge regarding cost structures in early stages. With me I have Stephanie and Sofie from Grant Thornton. Welcome.
Thank you.
Thank you.
So I'm gonna dive straight in. Let's start with the basics. What type of costs are there normally in a startup?
Of course, the kind of cost that you will have depends on what kind of business you're running. But to keep it at a very basic level, you can divide costs into 3 categories. You have the fixed costs, the variable costs, and the cost of like bigger purchases, let's say investments. Fixed costs are costs that you will have no matter if you have operational activity or not. And variable costs will depend on your level of activity. And the bigger purchases, if you're going to buy like a truck or a machine to set up your business and start, or like making it larger. So to put this into an example, let's say that you're running a lemonade truck and selling drinks. Your investments will, of course, be the truck and the machine that squeezes the lemons. Your fixed costs will be your monthly salary, and maybe you pay rent to stand with the truck on the town square. And the variable costs will be the lemons. So if you're expected to sell a lot of drinks, you will have a higher cost of lemons, and of course a lower cost of lemons if you're expected to sell less.
That's a great explanation of the different costs. Thank you. How should one know which costs their company has?
Yeah, I would recommend that you start with the basics. So the essentials for your business. If you're having a lemonade truck, I would start with the cost like lemons and other basic supplies. And secondly, I would try to connect to other business owners or networks with the right experience and ask them what cost to consider. Maybe you find out the cost for rent or permission or other important costs. And really use these insights to understanding your cost is really crucial to have a successful business. And lastly, a mistake I often find is that you forget to account for the development costs. So once you have complied your list of costs, you need to margin in the factor how you want to grow the business in the future.
Yeah, and I mean, both of you are very experienced. How does a business owner calculate how much they have to sell to cover all these costs that you're mentioning?
That's a very important question. Preferably, you will set the pricing by the value you bring to your customer or client. But if you don't know your cost, you will not know if you're making a profit or a loss. So one exercise that you can do, let's say that you're a service provider and you're selling hours. You need to add up all your costs, like the salaries, the social fees, the rent, the insurance fee, the fee to the bank, everything. Add that up and then divide it by the amount of hours that you're expecting to sell. And there you have your breaking point, your net zero. And if you price an hourly rate above that number, you will make a profit. And if you price lower, you will have a loss in the company. So the same thing goes if you are selling a product. Let's say you are selling pencils. Then you make the same exercise, you add up all the costs, and then you divide it by the amount of pencils that you're expecting to sell. Then you have your net zero for each pencil. Also, it's very important to stress test that little exercise, that calculation, because let's say that maybe your rent increases 10%. Well, what will that do with your pricing and with your margins? So if you recalculate, you can then see, okay, to have the same margin, I must increase my price with this much. And then you can compare that to what you think your clients or customers are willing to pay.
Well, that sounds reasonable. First calculate all the costs I have and then put a price and maybe add a bit more. But what's the difference between a cost and an expense?
Yeah, it's, I would say, a really common mistake, actually, to confuse these terms. But it's quite important to understand the difference. So if you try to put it in a simple way, an expense is the transaction that appears on your bank statement. If you're running this lemonade truck and you go to the supermarket to buy lemons, when you pay at the cashier, that's an expense. But if you receive an invoice or you pay in advance, the expense isn't until you actually pay for it. Cost, on the other hand, appears as soon as you consume something. So when you go and you buy the lemons, that's a cost. It doesn't matter if you pay for it in advance or after. If you, for example, invest in an expensive machine, the expense is the time of the purchase, but the cost is spread out over the time you can use the machine, for example, 5 years. So in other words, money in and money out is not the same thing as a profit. But it's important to keep track of both of them. And I recommend that you have both a cash flow budget and a cost budget.
And I can just add to that making a budget, a cash flow budget or result budget, is not a one-time exercise. It's important to track it and do closely follow-ups and see that you're within the budget, or if you're without, then you can make the decisions to correct it. Also, just one more thing. I understand it's quite difficult, these things. So I recommend to take help from someone in the field, like Sofie, or maybe contact a USC startup that has already done the journey. I'm sure that many are happy to help you.
Yeah, it's always good to meet peers and exchange experiences. Before we end this talk, do you have anything else you think it's important to add and share?
I think one of the most important things is what you talked about, Sofie, to keep to know that revenue and costs are one thing, and income and expenses are another thing. So they are different things, and it's equally important to track the both.
Yeah. I would just like to add that it's also really important to be proactive and really follow your financial statements and use your network to get really valuable insights.
That's great. Thank you so much. Thank you for sharing your knowledge and experience today. And I really want to thank Grant Thornton for supporting entrepreneurs. Before we end this talk, I will summarize it with 3 key takeaways. The first key takeaway is correct pricing. The pricing should be set by the value it brings the customer, but you have to compare to the cost you have. The second key takeaway is to keep a track of your financials. And the third key takeaway is reach out, take help. You have experts that can help you. You have other startups that have done the same journey and they're willing to share. So thank you for today.
Thank you.
Thank you.